You ever get that feeling that something big is coming, but you just can't put your finger on it? Crypto's been getting crushed. The hype is gone. Prices are way down, and sentiment is the worst it's been in years. If you're just looking at the charts, it feels like there's nothing left but pain. But that's a mistake. Because while everyone's focused on what's not working, and trust me, they are, and it drives me crazy, they're missing what's coming next. Right now, 5 powerful catalysts are building quietly in the background. Each one big enough to shift the entire bearish narrative and maybe even kickstart the next leg up. And here's the kicker. One of them could send Bitcoin soaring, even if everything else crashes. All right, guys, without further ado, let's get into it. So tariffs have been one of the biggest economic stories of the year, obviously. And crypto, it's been, well, let's just say, caught in the crossfire. We talked about it on this channel before. When Trump starts dropping tariff threats, markets really flinch and crypto bleeds. Why? Because Bitcoin is no longer the uncorrelated rebel it once claimed to be. It's trading like every other risk asset, tied to macro, vulnerable economic shocks, and highly reactive to uncertainty. And guess what markets hate more than bad news? Well, if you guys are viewers of the channel regularly, you know it's uncertainty. And right now, crypto Twitter sentiment is at its lowest in 6 months. Investors are spooked. And the biggest reason? Tariff fears. But there's a twist. What if Trump walks it back? Look, he's not signaling it yet. Quite the opposite, in fact. His team is pushing hard on Liberation Day rhetoric. You know this, it's all over the news.
Looking ahead to tomorrow, April 2nd, 2025, will go down as one of the most important days in modern American history. Our country has been one of the most open economies in the world, and we have the consumer base hands down, the best consumer base. But too many foreign countries have their markets closed to our exports. This is fundamentally unfair. The lack of reciprocity contributes to our large and persistent annual trade deficit that's gutted our industries and hollowed out key workforces. But those days of America, beginning tomorrow, being ripped off are over. American workers and businesses will be put first under President Trump, just as he promised on the campaign trail. The president's historic action tomorrow will improve American competitiveness in every area of industry, reduce our massive trade deficits, and ultimately protect our economic and national security.
They're framing it as a new economic dawn, a full-scale revival of the American manufacturing through aggressive trade policy, forcing labor back into the good old USA. And according to an official release, tariffs are going live right now. So yeah, short term, we're effed. It looks grim, I'm not gonna lie. But here is the point that nobody's talking about. Markets have already priced in max pain. We're trading like the worst case scenario is inevitable and it's already guaranteed. And if Trump softens just even a little bit, if the tariffs are delayed, diluted, or paired with new trade deals, markets could snap back fast. And remember, April is historically one of Bitcoin's strongest months. So when you stack April's bullish seasonality with even a slight trade pivot, and boom, we could see markets rebound fast. This isn't about loving tariffs or hating them. It's about watching the narrative shift. And if Trump shows any signs of backing down, markets will front run the reversal. Tariffs might be the spark, but the Fed, well, my friends, the Fed is the gasoline, the fuel for the fire. See, even if Trump doesn't back off tariffs, the economic damage they cause might force the Fed to do something even more market moving. Think rate cuts, or even the return of, good old quantitative easing that sent our bag so high before. That's right, printing money to prop up the economy. And that, my friends, could be one of the biggest crypto catalysts of them all. Now, here's how this could play out. Trump's tariffs and spending cuts are already throwing uncertainty into the economy. On top of publicly calling for Jerome Powell to cut rates, Trump's policies are creating enough economic drag that could put the Fed into a corner, cutting government spending and escalating trade wars while the economy slows. Now that is a recipe for a Fed reaction. According to Reuters, central bankers are already revising their forecasts, calling for slower growth, higher inflation, and the risk of a full-blown recession. But here is what really matters. Not all rate cuts are the same, not at all. In fact, if the Fed slashes rates because everything is crashing, that's bearish. But if they make an insurance cut in a still growing economy, like in 1984, 1995, and 1998, that is rocket fuel for risk assets, especially Bitcoin and our beloved altcoins. Now let's take it a step further. What if the Fed doesn't just cut rates, but also ends quantitative tightening and signals that quantitative easing is on the way? This would be a game changer for crypto. Quantitative tightening has been a huge headwind for crypto. It drains liquidity, strengthens the dollar, and pulls more money away from riskier assets like crypto. But if the Fed hits pause on quantitative tightening or even hints at easing, well, markets won't just wait around. They don't need a full-blown pivot, just a signal. Because markets don't react to what the Fed does. They react to what the Fed might do next. We know this all too well. The second traders sniff a change in the direction of liquidity, they front run it fast. This pricing happens before the pivot, not after. And right now, the Fed's staring down the same storm clouds that you and I see. If things start to break, they'll have no choice. And crypto was born in the chaos of easy money. It doesn't just survive it, it thrives in it. For years, crypto survived not because of Washington, but despite it. For over a decade, crypto's been stuck in legal limbo, ambushed by lawsuits, crushed by regulation through enforcement, and left guessing what is legal and what is not. Myself included, I left America because of this. But now the headwinds are shifting, and sure, it's moving at the speed of Congress, which is, well, it's slow. It's like Elon's pet snail, Gary. But for the first time, we're seeing real momentum that could finally unlock serious money into the space. Let me show you where the catalysts are. First up, stablecoins. We got the Stable Act. It's now moving through the House. This bill could federally license stablecoin issuers and force all players, banks, fintechs, and even states to play by the same rules. So why does this matter? Because stablecoins do over $15 trillion in volume a year. And that's just what they have. Imagine when that scales up. Once that pipeline gets regulatory clarity, institutions can step in and we're fully compliant. And then there's Ted Cruz trying to reverse the 2022 backdoor ban on crypto in retirement accounts. If that gets overturned, and right now it's under formal review, that opens the door for 401k money to start flowing into Bitcoin and other assets. We're finally seeing the SEC and the CFTC start to work together. Under Commissioner Hester Pierce, there's now a joint crypto task force trying to clarify what counts as a security, how registration works, and how disclosures should look. Please, as a builder in the space, I'm waiting for clarity. Please already. Because the number one fear in the space has always been regulatory whiplash. Fix it, please. And the capital floodgates can completely open. And finally, two major pieces of legislation are now being reviewed. We have the Responsible Financial Innovation Act and the Digital Asset Market Structure Act. Both are aimed at building a real legal framework around crypto, tokens, and DeFi. None of this is about headlines. It's about unlocking the capital that's still waiting on the sidelines. We saw what happened when the SEC approved Bitcoin ETFs. Billions in institutional capital flooded in, almost overnight. I mean, it was the most successful ETF in crypto history. Now imagine that same clarity extending beyond Bitcoin into stablecoin and altcoins and also DeFi. That's not just bullish. That's a complete repricing of the entire crypto asset class. And while that wall of money starts lining up, guess who's missing? You, me, the retail, they're gone, drained. Meme coins wiped out the hype crowd. No more stimmy checks, no more GameStop energy. The average investor got rinsed, rugged, and left holding the bag. That's why they're all gone. So who's left to bid or buy these markets? Who's going to send them higher? Well, it's going to be institutions. And guess what? They're coming. But this time, they're not just dipping into Bitcoin. Check this out. According to a survey from Coinbase and Ernst & Young, 83% of institutional investors plan to increase their crypto exposure by 2025. And not just by a little. 59% say they'll allocate more than 5% of their entire portfolio. This isn't retail hoping for a pump. This is real big money moving in. And here's where it gets really interesting. 73% of those same institutions, they already hold altcoins. They're not spreading bets across dozens of microcaps. They're sticking to blue chips. And who's leading the pack? Well, you probably know this because, well, they're doing a great job at marketing and they're everywhere. It's XRP and Solana. And here's where things get really interesting. 68% said they'd buy regulated single asset investment products like a Solana or XRP ETF the moment they get the green light. No wallets, no exchanges, just click and buy right from their brokerage accounts. Just look at what happened when Bitcoin got its ETF stamp of approval in 2024. Wall Street poured in $50 to $100 billion almost overnight. Now analysts say Solana and XRP could be next in line for an ETF approval, maybe even before the end of the year. And if there's one thing Wall Street can't resist, it's making money, baby. And it's a new shiny toy like an ETF to package up and sell. Wall Street's already buying big Bitcoin with one click through Fidelity and BlackRock. So do you really think that they'll stop there? Because once the ETFs roll out for altcoins with real utility, tokens like Solana and XRP with product market fits and actual value accrual, well, Wall Street won't hesitate. They're not chasing memes. They're buying assets that they can package, sell, and scale. And that's not all. The traditional financial infrastructure is finally catching up. BlackRock, Fidelity, Coinbase Custody, they're all building the tools. Circle's USDC is integrated with major banks, and not to mention all the other accolades they've done. And legacy firms like Schwab and E-Trade, well, they're quietly preparing to offer direct crypto access, not just for Bitcoin, but to a basket of crypto assets. Behind the scenes, banks are rolling out real crypto infrastructure, custody, trading, all fully on chain. And once regulatory green light flashes, they're not dipping their toes, they're diving in. And institutions aren't stopping at holding tokens. No. We have in legislation, yield-bearing ETFs with Ethereum. That's just the first. But DeFi is about to explode. Look at Trump and World Liberty. Right now, only 24% of institutions are dabbling in it. But that number is expected to triple to 75% within just 2 years. I don't even know if we're gonna have a 4-year cycle anymore. This thing might just keep pushing on. Legal clarity is forming. And in my personal opinion, I feel like people are just sidelined right now, waiting for it to finalize and crystallize before they dive in. And when the tools are in place, the flows follow. And those flows, they're no longer a matter of if, it's just a matter of when. So folks, there you have it. 5 catalysts, not hopium, not hype. This is real world shifts already in motion. Let's zoom out and recap. Okay, markets already priced in tariff doom, and any reversal could spark a bounce. The Fed is cornered, and rate cuts or quantitative easing could trigger the next leg up. Regulatory clarity is finally coming, which would unleash tons of sideline capital. Institutions are scaling up massively, deploying capital in altcoins and building out real infrastructure. And ETFs coming like Solana or XRP, well, they could unlock billions of dollars in fresh inflows, just like Bitcoin's ETF did. Any one of them could light the fuse, but together, they could ignite something way bigger. So ask yourself, are you waiting for the headlines, or are you already getting positioned before the crowd catches on? Guys, if you found this video helpful, do me a favor. It's a free and easy way to help the channel. Hit that like button. If you're new to the channel, what's up? My name is Chasse. Welcome. It's great to have you guys here. Subscribe to the channel. I promise you won't regret it. And share this with a loved one, because I'm sure that people who you care about would want to see this. And let me know in the comments, guys, which catalyst you're watching the closest. Guys, I'll catch you on the next one. Stay sharp and keep stacking sats.